Hey traders, this is Blake Morrow with ForexAnalytix. Do you have what it takes to be a successful trader? Do you want to take the next steps in your trading journey? How about if I told you that ForexAnalytix has a project that could really supercharge your trading from this day forward? The real question is, can you afford to miss that opportunity? I don't think you can. So click on the link down below to join our free webinar on February 15, 2022 at 11 a.m. Everything will be revealed then, and I'll see you there personally. So don't forget, register with the link down below in the video description. I'll see you there. Hey traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for January 30th, 2022. Hope you guys are having a great weekend. It's the weekend, and as I just mentioned, our special pricing is still up. I believe it goes down tomorrow, which would be at the end of the day, tomorrow on Sunday. So that means on Monday, it's going to revert back to you could take a trial for $1 for 10 days. But for those of you that have been waiting for this pricing, we extended it out this week because a lot of clients had asked if we could extend it out to the end of the month for, money reasons. So we did. And so you guys take advantage of it while you can. It's buy 1 month, get 1 month free. You can get a semi-annual for 4 months, or you can get an annual for 7 months for the price of 7. It's, the deal that we put up once a year. At these levels, at these prices, so don't miss your opportunity. Take advantage of it, especially if you're watching this on Sunday, the 30th. Look at your calendar. It's the 30th. Yeah. And then you can be involved in the community. You can get this wonderful desktop app. You can be involved in our chat room, probably one of the most active chat rooms in the currency market and probably in most markets. You can also download the mobile app and get all these great features and all these nice additions that we add to ForexAnalytix. So take advantage of that. I'm going to move on to talk about this week, because this week's a busy week. It's the beginning of the month. We're going into February. Don't forget the 31st, which will be on Monday. You're probably still going to see some end of month flows coming through the market. Could see some extra volatility as a result. So that's something to keep in mind. Also, that holds true for currencies, but we have a really important week with currencies, as we have the jobs report in the US, we have the jobs report in Canada, we also have the European Central Bank, the Bank of England. So, it's going to be a pretty busy week as far as data goes and as far as markets go. So let's start off. Let's talk about the S&P really quick. I should probably just start there. The reason why I should mention the S&P is we closed right on the underside of this 200-day moving average. I want to show you how important these levels are. First and foremost, you notice that we had, at the beginning of the week, we had a little bit of a false breakdown below key support right through here at the 40, that was roughly just below 4250 is the level that we were looking at. And that was actually some pretty important levels of support for the market to hold. As a result, we've bounced back towards the end of the week, towards the 200-day moving average. And if you ask me, it looks like we are going to recover this week, going at least into the early part of this next week. And I would be looking for levels like, let's just say, I would say, anywhere up towards the 618 retracements around the 4580 level. Previous support should be current resistance. Also, that's going to be the 618 retracement. So this level should offer great resistance on any rally. So if you see a rally back towards that level, if you're looking to be short in the equity markets or short risk, that's probably the level that I would be looking at on any rally. Now, we were actually, if you were listening to the daily webinars for the last couple of days, we were looking for a triangle consolidation. We closed actually at that triangle resistance on Friday. So I would not be surprised if we gap up, or even if we gap down come Sunday. We're gonna make a run for this 38% retracement that has capped us at the 4450 level on the S&P. So if you guys want to be bullish, if you want to look for a move back up towards that 4600, you might want to wait for this 38% retracement to be taken out, or in other words, the 4450 level. We break that, that's also horizontal resistance. That should take us back towards those levels. Now, the question will be, what's the dollar going to do? If you guys trade currencies, you're like, well, how's the dollar going to be influenced? I don't think the dollar is being really influenced a whole lot with risk appetite and risk aversion at this moment. However, I do have to point out that the Aussie dollar is at really key levels of support. You notice the Aussie has broken down in this bear flag pattern, but we're at that 70 cent level again. And this is really, really important support for the market. It's a big round number. The 38% retracement, long-term 38% retracement, is just above the 70 cent level at 70.58, right? Now, when you're looking at like a weekly fib level, like you can see here, it's you could say we can be on either side of that by 50 or 100 pips, and it's going to be within proximity. So when I look at a fib and I go, well, that Fibonacci is about 38% retracement. Yeah, we've been below here before and we've rallied. So we've been down here again, and I would not be surprised if risk appetite picks up, maybe the Aussie might regain its composure. The other thing is the euro. I want to take you over to the euro, especially with the ECB this week. The euro is pretty important. If you guys have been listening to the free webinars or even the private webinars that are for ForexAnalytix subscribers only, you guys know I've been paying really close attention to this weekly chart. So this is a weekly euro dollar chart. Take that high back in 2008. You can see that high right there. There's the high in 2011, 2014, 2018. Connect those, right? Now, you'll notice that we had a pivot off there. Well, we had a breakout back in 2020. We retested and respected it back in October 2020. And here we are doing basically the same pattern once again. Now, notice this pattern. We had this consolidation breakout, small or a little bit lower low right there, a little bit lower low, and I wouldn't be surprised if the euro rallies back. Now, keep in mind, there is the ECB meeting this week. Now, why is that so important? Well, with the ECB meeting, you have to imagine that everybody we've seen basically the Fed's hand. We know the Fed's going to be raising rates. A lot of people are assuming that it's going to be, maybe 4, possibly even 5 rate hikes in 2022. It's going to start in March. The Fed's pretty hawkish. They're going to continue to fight inflation. We kind of know where the Fed stands. We're not really too sure where the ECB stands right now. And a lot of people have been very downbeat on the ECB, thinking that they're going to be, extremely dovish. If we have some hawkish commentary, you could see that euro really rally back, and we can see the yield differentials between the ECB and the FOMC kind of tighten up a little bit, and that would create a bullish case in the euro. Now, my opinion is if we get below 111, I'm not sure if you, me, or anybody else are going to want to be long if we get much below 111 in the euro dollar. Now, we also have to take into account that the Bank of England is also this week. Now, the Bank of England, let me take a step back here with the sterling or with the cable. The cable's held up a lot better than the euro. With the euro's trading into new trend lows, where if you look at the cable or the sterling, we're at the 618 retracement. We've pulled back. We found some support around the 133.85 level, 133.82 as I had it on a different chart with a different feed, but you guys get the gist of it. We're around pretty key levels here, and the reason why is you can see this previous support back in November, see this high back in November as well of 2001, then you have this previous high in December. Well, look at that. This whole zone, if you will, is a lot of support with the 618 retracement right here. Now, that doesn't mean it's going to hold, but that does mean that you can see why we're stalling at this level. Now, the good news is if that level breaks following the Bank of England come Thursday, then we know that that could open up the door for a retest of like the 132, 131.50 level. Okay, that could happen following the Bank of England. Flip side to that is, again, we are creating, if we do stall here and we do bounce around these levels, that means we are creating a higher low, which could argue a higher high moving forward. We do know that the 200-day moving average stuck the pair like a well, I don't want to say anything, but it really stalled any advance that we saw a couple of weeks back, and we noted that here on the week ahead video. If you guys go back 2 weeks ago, you'll see the highlights of that and how important that 200-day moving average has been. And so you can see we're kind of boxed between this 137.50 and 133.80 level. We might get down to 133.50, but I think this is the range that's in play, and I think we'll know if we're going to break that support and make a run back for the 200-day moving average, hold that support, make a run back for the 200-day moving average, or break through this support and head back down to 131.50 following Thursday with the Bank of England. Now, don't forget, we do have the jobs report on Friday. We also have the Canadian. I'm not really too terribly excited about the Canadian right now. I can tell you this, though. I did play it long off the 200-day moving average. Most of you guys know that from last week. I want to say week and a half ago. I was playing it off the 200-day moving average, had a nice little double bottom here, false breakdown below these lows that took us higher. I ultimately think we are in some sort of triangle with the 129.50 being really, really key. Oops, I'm going to draw this not this way, but yeah, I guess I can do it this way. Something like this, like we have some sort of triangle formation forming in the dollar Canadian that looks, I have to continue to go out further. You guys get the gist of it. But basically, I think that that we are, we are in a triangle right now, and we're currently just trying to figure out exactly where we want to go. And I would say we're in the middle of the triangle. So I don't have a whole lot of direction here with the US dollar Canadian. One thing that we do have to take into account that crude oil is extremely strong. We closed near the highs of the week, and with crude oil as strong as it is, above $87, and with the Ukraine Russia situation, obviously on pins and needles, that could keep crude oil very well supported, which in essence is going to have a upside effect on the Canadian dollar, making it very difficult for the dollar Canadian to move up towards 129.50, especially if crude oil continues to stay strong. Now, if crude oil stays strong. Now, if crude oil starts to pull back, that might open up the door for the dollar Canadian to move higher. And also keep in mind that the Friday is going to be the Canadian jobs report as well. A couple other things I should talk about is I have to talk about gold. Gold's been extremely weak, but if you guys are a gold bull, here's the thing about gold. We actually held some pretty key trend line support. You could say we're in a symmetrical triangle in gold, and we're consolidating. I know all the arguments. I understand why gold should be higher theoretically and why everybody's so bullish gold, especially with inflation expectations, real rates moving higher. Gold should be moving higher, but it's not. And that's the thing that we have to be respectful of, is that gold is, range bound. But I'd really love to see a nice, strong move and a sustained break of this 1850 level, or a sustained break below 1775 before I get very bullish or get very bearish gold. And as you can see, we are, have this nice little symmetrical triangle. It's probably setting up for a pretty big breakout sometime in the coming weeks ahead. Now, I have to mention this. If you look at gold and you look at how it's performed over the last couple of years, gold has rallied substantially, and we're consolidating. So it's not like we saw this big rally up and above 2,000, and we've seen this huge pullback and gold's lost half of its value. That hasn't been the case. The pullbacks have been pretty, or consolidation has been pretty orderly, and we've been consolidating and maintaining a lion's share of these gains, which in essence is pretty bullish right now. But if the dollar continues to be strong, as we're just near 2022 highs, we just had fresh new highs in the dollar index. As long as the dollar index continues to stay strong, it's going to be a kind of a headwind for gold. I think I'm still a big correlations guy as far as gold and the dollar goes. So as long as gold stays, as the dollar stays strong, it's going to be very difficult for the dollar gold to move higher. But for those of you that have been listening to our daily analysis, by the way, if you don't know how to get to the daily analysis, go to our website, ForexAnalytix.com. Go to, excuse me, sorry about that.
go to the webinar tab. Sorry about that. Go to the webinar tab, and you can see right here where it says free F.A.C.E webinar. Click right there, and you can listen to our webinars free every single day. They're free for you. It's got myself, the rest of the team. We give our opinions on what's happening for that day in the markets. But like I said, if you've been listening to the free daily webinars, you know I've been pretty bullish the dollar. I thought we were going to hit new highs following the FOMC. It was the easier trade is just to be long dollars. But we are divergent on relative strength in the dollar index. We are at the 127% extension or struggling here at it. I do think that we're going to have some significant resistance moving forward in the dollar index. So I'm getting a little bit more skeptical of being long dollars up here. That means that the euro, in my opinion, could possibly bounce this week, as I told you guys earlier, and you got to watch the sterling as well. So there's a lot more to the currency market than what I've just gone over in a very short period of time. But remember, this is the week ahead video, and if you want to get our daily analysis, make sure you tune into the F.A.C.E webinar. And guys and gals, if you like this webinar content, make sure you give myself a thumbs up, you give my team a thumbs up, because we're working even on the weekends to make sure you get this analysis for free. So give us a thumbs up, subscribe to the channel so you don't miss any of our free content that we do publish, because if you missed the webinar, you can go back to our YouTube channel and listen to that webinar just a couple hours later once we get it uploaded. Guys and gals, I hope you have a great remainder of your weekend, and make sure you take advantage of this pricing, because it will go away, and when it's gone, you're gonna have to wait for some time to get it back. All right, we'll see you soon. My name is Blake Morrow. I hope you have a great remainder of your weekend. Thanks for tuning in.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.